Hello and welcome to another update video about Ethereum. So we take a look at the ETH chart. That also worked out nicely here in line with the primary expectation and the labeling of the chart, in that we are currently in a wave 2 here in green. I basically can take the alternative out now as well because we made a lower low. So the alternative was that the low of that wave 2 correction, from the 1560 level, which was down here, we created a wave 1 to the upside in an impulsive move up, and then we came down in what could have been a wave 2 here, but it became only the alternative yesterday, ready and just in time before the move up and then the smash down. So this was only the alternative. Take that out now because we made the lower low. A few things here to mention now. So this worked out so far. We moved down in a wave A. We then moved up in a wave B, came exactly into my target area, maxed that out as well. We retraced all the way to the top of that wave B retracement area. And then we came down very, very strongly. A very strong reaction that we saw coming already yesterday as per this wave count. That it would happen so impulsively, not necessarily a surprise, but it is strong, okay. But it basically just adds to the view that this is a wave C, because a wave C is an impulsive wave. Okay. Now, when is this finished? So there's a few possibilities here that we can look at. The first target for this wave C down, and I can only repeat it from the previous video, is the 1787 level. That is the 1-to-1 ratio between wave A and wave C. That's the first target. Just below that, we have the 50-day moving average at 1766, would also be a possible key support. Okay. Below that, we've got the key level, the $1,700 level. That is a highly relevant level on the Ethereum chart, more a long-term level, but highly relevant. And below that, at 1679, we have the 1.618 extension of the wave A. That would also be a valid level. And that would actually be the ideal level for the wave C. Well, it doesn't necessarily need to get there. The 1-to-1 ratio is fine as well. From the low now, we can also not only define the targets based on these two levels, we can also take a look just at the Fibonacci retracements. And if we take a look at that, we can see that we have now reached the 38.2% Fibonacci retracement level. We're currently reacting to that. Just below that, we've got the 50% Fib level at 1791. Now you can already see that this is a key support level, which is basically matching the 1787 level, which is the 1-to-1 ratio between wave A and wave C. So here we've got a confluence of support, which, again, you have a retracement level that is very important for a wave 2, and you've got the A to C proportionality target. So that is another key pointer that would tell us that, indeed, the low of the wave 2 could be here, but we're not there yet at 1787. And then below that, we've got the 61.8% level, Fib level at 1736. Just below that, the 78.6% Fib level at 1658. So what I'm doing now, I'm going to just add here where I believe we should find the reversal here, which is between that 1-to-1 ratio level and the 1.618 extension level. From here, then, we would ideally expect the wave 3 to the upside, based on the current price information that we have on the chart. In addition to that, we've got this head and shoulders on the chart. I mean, head and shoulders don't exist in Elliott Wave. Therefore, I often don't mention these patterns because they can give you a wrong assumption. But here you can see nicely how patterns, traditional patterns that pattern traders would use, and the Elliott Waves work together. Both are pointing towards a further move to the downside. So the head and shoulders pattern, you can see that we broke the neckline. Neckline was probably here around 1864. Okay, so that was the neckline. And if we draw just a straight line from the head to the neckline and we add it to the breakout point, where would we land? You can see that we pretty much land very close. I mean, depending on where I pull it to, breakout point was probably here at the neckline. Then it would land pretty much exactly at the $1,700 level, very close to the 1.618 extension target. And again, another confluence, another point that adds here as a confluence factor, that one of these support levels should be the reversal point. I mean, we had here the 50% fib retracement and the 1-to-1 ratio here at 1790 roughly. Then we've got this highly relevant $1,700 level that is just a long-term support and resistance level on the ETH chart, plus now this technical target of the head and shoulders, plus down here the 1680 level, which is the 1.618 extension of the wave A. So if we smash through that, then we need to rethink this all, but strictly speaking, that wave 2 will not get invalidated until we drop below that 1560 level. And I told you before, if we go below 1560, then we are probably going to go into this area here, which is located between 1440 and 1230. That means then that we have already started the larger wave 2. From here we would then move out in a larger wave 3. But for now, primarily I would expect the continuation of this uptrend. And that is pretty much what I can currently tell you here about ETH. Yeah. And we just need to be a bit patient, and probably in a few hours or maybe tomorrow we already know more. And yeah, one more thing I wanted to show you. It's just here the subdivisions of that wave 2, which is over the wave C, which is currently coming down here. For that we go to the 15-minute chart. And it's really tricky. It lacks quite a bit of structure here. Yeah. I mean, there's a few possibilities here. One would just be that we have a wave 1 down here, a wave 2 up there, and this was all a wave 3. So labeling it basically that this was the 1. We had a 2 here, very short wave 2, came down in the 3. This is the wave 4, and we would then move down in another wave 5. Could hit perfectly here 1790, for example. What is important to understand is here the retracements of the wave 4, and there it's basically getting nearly to its limits. Yeah, so in terms of this move up, yeah, it should actually not go much higher than 1861. The 50% fib retracement is normally like the maximum a wave 4 would normally do. Okay, so keep a key eye on that level, and then we could move down. If we get above 1885, that is the wave 1 low. If we get above that level impulsively, it would indicate already that the wave low here was already in. Yeah, because there is another way to count this, in that we could see this as the 3, this as the 4, yeah, and then the wave 5 was this. But then I would want to see price action above that level, above 1885. And that would be the first indication. Best indication though would be a move above the wave B that was at 1960. Alright, and that's my update about Ethereum. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye bye.